Very good afternoon, everyone. I hope my voice is audible. You can use the chat to quickly confirm. All right. So we're just going to wait for a while. We have a bunch of audience who are yet to join. Okay, I see Mr. Yogendra and Mr. Biswajit to a message. Yeah. Okay, Mr. Harshit, I see that you raised your hand. Let me know if there's any queries, sir. Okay. Very good evening, Mr. Kamal. Glad to see you again. I know we have a few repeat attendees as well here. Mr. Inderjeet, I see. I think Ms. Lakshmi also I see here. Mr. Manoj. Okay, a few others. Mr. Shyam. Yes. Okay, great. Mr. Siddesha, you have a question? I see your hands have been raised. Let me know if there's any question that you have, sir. Hello, Mr. Chandar. Good evening, sir. All right. So anyway, as we're waiting for we are going to wait for another 5 minutes before we start. I see a healthy number of audience that is joining. Uh, Good to see. So I just want to keep the engagement going on chat. So in the meantime, how about we all have a quick engagement on chat to understand what do you understand by ITC? How familiar are you with ITC? And how important do you think is ITC? A few comments on the chat would be great from you guys. And we expect it to be a very interactive session today. So I will leave the chat open to all. Very good evening, Mr. Manoj. Good evening, Ms. Shilpa. Thanks for letting us know, Mr. Chandar. Very good evening. Glad to have you on our webinar today. Good evening, Mr. Kiran. Okay, Mr. Leo says ITC is very important for running a business smooth. Absolutely. I fully agree to that. Okay. Audience, what is it that, okay, let me quickly ask a few questions, okay, one by one, maybe that'll be easier. How many of you are aware of ITC here? Okay. Mr. Sandeep, very good evening. Okay, Mr. Sandar says what we have here is just to reduce the cascading effect of tax. I like that, sir. Yeah, I agree to that. Let's understand in depth today about ITC. Now, I'm pretty sure, most of you would have definitely, obviously, our majority of our audience here today are from the tax end or the finance team. So, ITC may not be a very new topic to all, but I am sure you have a lot of ITC related doubts that might pop up today. We will surely take that up. Good evening, Mr. Pooja. Me having some ITC related knowledge. Okay. All right, Mr. Hari Krishna. Okay. And I would like to also know what is it that you're expecting from today's session? It says mastering input tax credit, right? Also, we mentioned that we will show you how you can claim up to 100% ITC, things like that. Now, when we mean by this, we do not mean that we will show you a demo of a solution or things like that, but surely Mr. Akela will give you some tips on how you can claim 100% ITC by let's say you need to adhere to certain protocols, certain rules, certain deadlines. This is how you can claim 100% ITC. So this is something that we will explain today. Okay, how to utilize all the ITC. Okay, Mr. Chandar says would like to know where we can't take the ITCs. Okay, great. Eligibility of ITC is the main issue. Comment from Mr. Charan. Okay, great. Good to see the responses. Okay, all right. Great. I like how there's a lot of interaction already, even before we started the webinar. Let's keep this going, everyone. Mr. Biswajit says maximum ITC availment improves companies' positive cash inflow. Absolutely. Mahesh Arya, good evening, sir. Claiming ITC seems to be quite complicated. Okay, we will surely try and uncomplicate it for you, sir, today. Let's see how we can help you out with that. Okay, Ms. Sindhuja says Rule 42, 43, common ITC reversal also. Okay, ISD in addition to cross charge from Mr. Nagesh. Okay, section 73 and 74 implications. And Mr. Inderjeet, scope where it was restricted earlier, but now we can avail with few updates upon it. Okay, all right. Okay, great. Audience, thank you all for already being a great set of audience for us. I'm sure today's session is going to be highly interactive. Just a kind request, I'd like all of you to keep this engagement going as the session goes forward. For the repeat attendees, obviously you all know that we have a dedicated Q&A session towards the end of the session. So we will surely take up all the queries. Let me get started with the webinar, guys. Thank you all for being a patient audience. I think Mr. Dhanashekhar has raised his hand. Mr. Dhanashekhar, let me know if there's anything on chat. I'll take it up. Okay. Very good evening to all. I hope my voice is loud and clear. A quick yes would be great on chat so that I can get going. Okay. All right. Okay. Great. Thank you all. Thank you. Wonderful. All right. So let me introduce myself. I'm Siddharth Nandakumar. I handle product marketing at the company that I represent, that is WebSolve. So what we are going to do before we move forward is I will run you through a quick few slides of the company that I represent to give you a background of where we come from and what we do for customers, followed by which we will straight away introduce our speaker for the day, Mr. Akela, and I will hand it over to him. So let's move forward. All right. This is a quick slide of our company's evolution. As you all know, every company undergoes changes, right? Over the years, market trends, market changes, a lot of different consumer needs, evolving changes. These are the things. So how did we evolve over the years is something that I'm going to quickly give you a gist. So in fact, we were part of Wipro back in 1988. We were a division of Wipro. We were the manufacturing division of Wipro's domestic IT business. So printer peripherals, right? When I mean peripherals, your toners, cartridges, and other components that remain core to the functioning of a printer. This is what we were manufacturing. This was also very well known for dot matrix printers, which was famous up to 2010, if I'm right. This is what we were taking care of. Now, while we were part of Wipro, the company decided to come out of Wipro, in fact, because they thought that there will be more potential if we separate out of Wipro and come out as a separate entity. So that is what happened. A group of management decided to step out of Wipro and form a separate company in the name of Wipro E-Peripherals, which later on came to be known as Web Solutions. And our printing business was carried forward, our managed print services, which I'll explain later. And over the years, the company decided to expand its product portfolio, and we also launched something called Digital Workplace Services in 2017. That is your workflow automation. We also have a GST solution which was introduced at that time. And over the years, there are different entities. They all combined to become one entity. And the latest, most significant changeover that happened to the company in recent times, that is last year, July 2023, was the complete rebrand exercise. So we are known by the brand Websol as of today, and we have a completely refreshed product lineup. Our visions, a lot of things have evolved in terms of the market trends and the consumer need. So this is something that we are embracing and taking forward. Our core idea is to elevate work for meaningful outcomes. So let me quickly explain a few highlights for the company. As you can see, we have close to 24 years of industry expertise. We have close to 560 enterprise customers. We're present in 2,600 locations to be precise in India. And a quick view of some of our customers, some of our large customers, as you can see. Okay, let's move forward. Now, without any further ado, now, as I mentioned, our company underwent a complete brand transformation, right? Now, that will also translate to our product portfolio. As you can see, FluidWorks, we are known, our product portfolio goes by the name FluidWorks. The idea being fluid, as you all know, is something that it flows, right? So our product portfolio is built, it is tailored in such a way that we'll be able to offer you a scalable solution based on your requirement. Now, when I mean your requirement, I mean you as an end user. So we do not mean an organization. Every organization will have different employees, right? Who have different requirements, who have a different way of working. So our solution will be able to be tailored as per your requirement, keeping in mind that every user is a core importance for us. So that is why the name Fluid. Now, FluidWorks is our intelligent workplace suite under which we have different offerings, which I will explain as we move forward. All right. What is Fluid Pro? This is our managed IT services. When I mean managed IT services, we will take care of your entire IT infrastructure services. So your servers, your server room, the Wi-Fi access points, or any other hardware that is required to be taken care of internally and across the country for your organization is something that we take care of. We also have a 24/7 NOC support center based in Bangalore. So this is what we take care of. That is Fluid Pro for you. Fluid Print is our signature offering. This is managed print services. What we do here is we offer a rental model wherein we will deploy printers irrespective of the brand. We are a brand agnostic firm, and you will be charged per print. That means based on the number of papers you print on a daily basis, or it could be quarterly or annually, we will charge you on that. And we are also number one in India on this end. Now, what is Fluid Map? Now, we have deployed different IT assets in your organization, correct? Printers, your servers, Wi-Fi access points. How do you monitor all this, right? We cannot just deploy. We also need to monitor them at all times. This is what Fluid Map is. We deploy a remote monitoring solution wherein your admin and us, that is your vendor, will be able to monitor your all your IT assets at all times. So your toner level, your cartridge level, If there's any hardware that has downtime or uptime, all of this is taken care by Fluid Map. And we also have Fluid Trail, which is our signature workflow automation solution. Basically, you will be able to automate business processes, your existing email approvals or candidate onboarding for the HR team, procurement, all of this can be taken care. We also have automation for finance and tax teams as well. Now, moving on to Flow Tax, which might interest the audience here today. This is our managed GST automation solution. We have an all-in-one, one-stop web-hosted application which takes care of your filing, reconciliation, e-invoice automation, e-way bills. All of this is taken care by Flow Tax. And moving on to products, which I will not explain as of today, since this might not be relevant, we also have a presence on the retail end. When I mean retail, we tend to be your supermarkets, kirana stores, jewelry stores. All of this is something that we take care of. We have a billing device ecospace. We also have POS machines, POS software. This is what we take care of on the products end. And we have close to 2 lakh customers on that end. All right, moving to the next slide. We will obviously not be showing a demo of our solution since this demo will purely be presentation oriented. But what we can quickly do is launch a poll for all of you to just understand if you are interested to see a free demo of our solution, that is FlowTax. Please mind that this is a free demo. We'll be able to reach out to you after the demo in about 1 or 2 working days, and we will show you a free demo of our GST solution. I do know that a bunch of you are already using some sort of GST solution e-invoice software, but let us also take into factor that we are moving to a new financial year. So I am sure some of you might be exploring GST solutions at this point, correct? So keeping that in mind, I will also request those of you who are interested to explore to definitely go ahead and click on yes, and we will be able to schedule a demo based on your availability in the coming days. Let me leave this poll on for another 20 seconds before I take it down. Mr. Chandar, yes. We will be talking about GST only. Yes. All right, let me end the poll. Thank you all for your inputs. Okay, let's move forward. Without any further ado, let's introduce our speaker for the day, Mr. Akela Prakash Rao. A quick introduction about him. Mr. Akela is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani in electrical and electronics engineering. He is also a gold medal holder, completed LLB from Andhra University in the year 2001. He worked in the Central Board of Indirect Taxes and Customs, that is CBIC, from 1994 to 2008. He's worked for KPMG Bangalore from 2008 to 13. His other major stints were with Toyota Kirloskar Motor, Bidadi, from the years 2013 to 2016, and lastly, Biocon from 2016 to 2020-21. Mr. Akela is also a member of various indirect tax committees of trade bodies, to mention a few like BCCI, CII, FICCI, etc. He is also an active article writer in platforms such as TIOL, Tax Sutra, addressing various tax issues. Mr. Akela, who is also a very regular speaker for us over the last 2 years, aside speaking for us, he is also an active speaker and panelist on various other forums addressing indirect tax matters. He comes with more than 28 years of experience in the field of indirect taxes with exposure in government, consultancy, and industries, to name a few like auto and pharma. He comes with hands-on experience in GST, customs, FTP, SEZ, central and state excise, service tax, VAT, and so on. Mr. Akhil is currently practicing as an indirect tax advocate, assisting a large number of clients on all aspects of indirect taxes at all levels. I take great pleasure in introducing him on yet another webinar with us. I'm sure the audience is looking forward to directly hearing from you, sir. Over to you, sir. Thank you.
Yeah, very good afternoon to all the people. And first, my thanks to Siddharth for that nice introduction. So I could see not many people who are repeat audience, who are coming and attending this session today. But this input tax credit is something which I religiously cover in every March of the last 2 financial years that I have covered it. But still, I could see that there are queries and there are people who are eager to know like how best that I can improve the input tax availment in my organization. That is something really interesting that even after almost 6 years is already over, ever since the introduction of the GST, now that we are going to complete the 7th year also, but still that we are seeing that the ITC has become a kind of an enigma that people need to crack it in order to optimize it. So the best thing for it is to refresh our basics in one go, and then we see that what can be the areas where that we need to improve on. So maybe it is going to be a somewhat a boring exercise for those that who know the basics, but nevertheless, that for the interest of majority of the audience, that I'll be rushing through the basics first, and after that, I'll be definitely taking all your queries. So my request to you is that please pose you all your questions in the Q&A. Don't wait till the end so that you can ask in person. But if you have got any difficulty that it needs to be explained, certainly that we will attend to that. And also addressing some of the people's concern that when the initial introduction is happening, because this is a free webinar, that the person who is hosting it has got every right to introduce his own product. That is the reason that it is not going to be starting with GST and ending with GST. Certainly that you have to bear with the advertisement that is happening. So the way that you see the OTTs nowadays, that nothing comes free. So that is the reason, that is the cost that you are paying, and thanks for understanding it. So moving on to the topic, that the agenda today is going to cover the understanding the basics. What are the documents that are required for input tax credit? What are exempted supplies? What are the eligibility conditions for the ITC, and who are the eligible persons? What are the set of rules in the ITC? What are the restrictions we have? And when the input tax credit is not going to be eligible, and what are the special cases for the ITC, and some of the commercial terms and pointers to watch out for. And then we will go for with the question and answers. Next slide, please. Yeah, goods and service tax is applicable on goods and services which are taxable. So these words are very, very important. So this PPT at the end of the session is going to be shared with you. So each of these things are written out of the experience and also from the books only, that I have not invented anything new. But what you need to understand, that each and every word has got some kind of an essence in it. So goods and service tax is applicable on goods and services, which you know it. But these goods and services are to be taxable. So you need to understand what is taxable supply. So that is where section 2108 explains what is taxable supply means. A supply of goods or services or both, which is leviable to tax under this act. Again, that they say that something is leviable to tax under this act. So you need to know what are the goods or what are the services which are leviable to tax under the GST Act. Then you will know those are the taxable supplies. Then you will know that what is going to be the goods and all. But first of all, we should know what is goods. That is defined under section 252. That means every kind of movable property other than money and securities, but includes actionable claim, growing crops, grass, and things attached to or farming part of the land, which are agreed to be severed before supply or under a contract of supply. And section 2102 services means anything other than goods, money, and securities, but includes activities relating to the use of money or its conversion by cash or by any other mode from one form, currency, or denomination to another form, currency, or denomination for which a separate consideration is charged. So for removal of doubts, it is hereby clarified that expression services includes facilitating or arranging transactions in securities. The word supply is not defined under the Act. Supply can be supply or non-taxable supply also. So one needs to be aware of all these definitions very clearly. Next slide, please. So the input tax credit can be from the below. It can be from the input goods. It can be from input services. It can be from the capital goods. It can be some ITC which you have received from the input service distributor, and it can be from the reverse charge mechanism on services which you have paid in cash, and IGST portion of the import duties are recredit of the ITC on rejection of your refund. So the input tax credit can be from any of these. It is not just from the raw material. It is input goods. But input credit is something which is even on the capital goods also, whatever the credit you take, it is called input credit only. So input credit is comprising of these many baskets. So what is input? Input means any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of a business. Input service means any service used or intended to be used by a supplier in the course or furtherance of a business. So what is capital goods? Because unless you know capital goods, because only capital goods are carved out, everything else is inputs. So capital goods means goods, the value of which is capitalized in the books of accounts of the person claiming the input tax credit and which are used and intended to be used in the course or furtherance of business. Only when they are intended to be used in the course or furtherance of a business, capital goods are defined in such a way. Next slide, please. So 262 defines input tax. Input tax in relation to a registered person means central tax, CGST, state tax, SGST, integrated tax, IGST, and union territory tax, UTGST, charged on any supply of goods or services are both made to him and includes the IGST and service tax charged on the import of goods, the tax payable under the provisions of section 3(4) of 9, reverse charge mechanism, the tax payable under the provisions of subsections 3(4) of section 5 of IGST, which is RCM, and the tax payable under the provisions of subsection 3(4) of section 9 of the respective state goods and services tax, and the tax payable under the provisions of section 3(4) of section 7 of the Union Territory of Goods and Services Tax, but does not include the tax paid under the composition levy. And input tax credit means the credit of input tax. See, it is a jugglery of the English words that input tax credit has been defined as the credit of input tax. But that's how the law is. Next slide, please. So, what are the documents that you require for availing the input tax credit? You need an invoice, or an ISD invoice, or a self-invoice in the case of RCM supply, a debit note, or a bill of entry. These are the documents which are required for you to avail input tax credit. So somebody may question that when I paid some tax which I missed out in the past in customs under TR6 challan. So whether TR6 challan is a document, unfortunately, TR6 challan has not been recognized as a document by the department. However, the credit is being allowed, but sometimes they question it, but as a matter of practice, it is being allowed. So that is the reason TR6 is not finding place over here, but otherwise, these are the documents which are required for you to avail any credit. It is always suggested that corresponding e-way bill is also preserved to evidence the movement of goods. The payment of proof needs to be preserved till audits are completed. Supreme Court decision in the matter of Ecom Coffee Trading Private Limited in Karnataka VAT matter supports this view. This is a very, very important judgment. I urge all of you people that if your time permits, please go through the actual text of the judgment, though it has been pronounced in the erstwhile Karnataka VAT matters, but it has settled certain issues under the GST, and citing this particular judgment of the Supreme Court, many GST issues were decided by several high courts across India, wherein that they said whatever the conditions that were already provided under the law, the additional condition could be the movement has to be established by way of documents. So the e-way bill and the payments that you have made at each of the toll gates, all this information that one needs to preserve in order to face the audits when your ITC was questioned by the department, then these are going to come handy for you based on this particular decision, that whether irrespective of whether your supplier has paid the taxes to the government or filed the returns, at least that from your side, you are a bona fide person asking for your ITC as a matter of right. That you can establish by this, but that doesn't mean that it is 100% guaranteed that once you have kept all the toll gate bills and the e-way bill under, that you are going to get the ITC. That will be subjected to further questioning, but at least to a large extent, it establishes your bona fides. That is the reason this is a suggestion. This is a very important judgment one requires to go through. Next slide, please. Three kinds of supplies have been included as exempted supplies. Supplies attracting nil rate, so wholly exempt, non-taxable supplies. So what are the supplies attracting nil rate? This would be supplies covered at nil rate in the rate notification stipulating the applicable rates of the tax. Wholly exempt are the supplies covered in the exemption rate notifications. And non-taxable supplies are alcoholic liquor for human consumption, petroleum products which are not subsumed under the GST. For apportioning the common credit, we need the value of exempted supplies, and includes the supplies under reverse charge mechanism, transaction in securities, sale of land and completed buildings, high C sales, and sale in the course of import, that inbound sales. All these are treated as an exempted supplies, wherein under Rule 42-43, prorated ITC requires to be reversed. So for that purpose, you need to understand what are the exempted supplies. So this is in a nutshell where that you need to take care. Next slide, please.
Yeah. So if you don't mind, I'll just quickly.
Yeah, please go ahead.
Okay. So audience, I would request all of you to quickly check your chat. We have a bunch of polls that are coming in, but just a rather basic poll for all of you. A simple question. Request all of you to check your chat. There's a LinkedIn poll that is running live on our LinkedIn page. Request all of you to click on it and select one of the options that are there, and we can come back to the presentation. Let me read out the question that is there anyway. What challenges do you face when claiming input tax credit? Is it eligibility criteria or documentation and record keeping, regulatory complaints, or is it utilization of ITC? I did notice a bunch of them who mentioned saying, I would like to understand the utilization of ITC. We'll come to that, but request all of you to attend this poll and then we can continue. Okay. Also, audience, on a side note, those of you are interested to see more GST content, polls, and other GST related blogs, we actually regularly do that on our page. And I would request all of you to also hit on follow. You can follow our page, and you will always have constant content that will be coming up on your feed. All right. Okay, so once you're done, you can come back. We will go ahead with the presentation. Sir, over to you. I'll go to the next slide.
Yeah. So there are certain eligibility conditions which we need to understand in order to avail the input tax credit. So they are under section 16. So this section 16 talks as under every registered person is eligible for the input tax credit subject to the conditions and restrictions which are specified in the law. And some of the important conditions are given here. He should be in possession of an invoice or a debit note or such other tax-paying document like bill of entry for the supply from a registered person. Here only the people are interpreting that even the TR6 challan is also a document which is evidencing the that the tax has been paid. So why it cannot be a document for availing the credit? Yes, it is a debatable question. I fully agree that TR6 challan should also be included, but unfortunately, the lawmakers did not include. They thought the bill of entry is the right document. But when you get assessed on a bill of entry, the document you use for making the tax payment is again TR6 challan only. But unfortunately, that they do not want to recognize the TR6 for their own reasons. But in the field, the TR6 challan is also a document which is being used. So the details of such invoices or debit note should have been declared in the GSTR1 by the said supplier. Such details are communicated to the recipient in GSTR2A. The tax thereon in the invoice or a debit note or a tax-paying document has been discharged duly by the registered person, either in cash or by using the ITC at his head. Though the law mandates only these to be the important conditions, but the jurisprudence has developed in such a way, as I explained in the Supreme Court decision of the Ecom Coffee Trading Company, that you need to have the evidence that the goods have moved from the supplier to the recipient also by way of a e-way bill and the toll taxes paid on the way. So that is also one of the important documents during the investigations or audit. And later, when the department questions your the ITC eligibility in your hands. Next slide, please. Some of the other things, the tax return in the GST or PB has been filed. Evidence in such payment, goods and services are used or intended to be used in the course of furtherance of its business. Supply is received or deemed to have been received by the recipient. The recipient paid for such invoices in 180 days from the date of invoice toward the consideration as well as the GST. Of course, in case of MSME, it is 45 days only. And when the goods are supplied in lots, the ITC can be availed on receipt of the last lot, and evidence for transport of the goods is available on record. This is emanating out of the jurisprudence, which we have discussed just now. Next slide, please. So, who are the eligible persons? As far as capital goods are concerned, no input tax credit is available for personal purchases or for capital goods used for in exempted sales. On normal taxable supplies, GST charged while purchasing capital goods will be completely available as ITC, because in the erstwhile central excise law, that there is a condition that 50% this year, 50% next year. No such problems in the GST. 100% you can avail it in the first go itself. And if the capital goods are used partly for business and partly for personal use, then ITC is calculated on the proportionate basis. And ITC will be allowed to the principal manufacturer if a capital asset has been sent to a job worker for job work. If the taxable person sells such capital goods on which ITC has been taken, then such person is liable to pay the GST of a higher amount from the following. So ITC taken on such capital goods less 5 percentage points per quarter of a year or part thereof from the date of invoice or sale price of the capital goods multiplied by the GST rate. And so 20% is the depreciation which is given, and this is going to be absorbed in 5 years time frame. For a capital goods held in stock, ITC involved in remaining useful life in months shall be computed on a prorated basis. Assuming useful life is 60 months, that is 5 years, where refractory bits, molds and dies, jigs and fixtures are supplied as scrap, taxable person may pay tax on the transaction value of such goods determined. That is that when the goods are sold as such, then the goods will attract the appropriate classification and the rate. But when they are sold as a scrap, then they will be classified as a scrap, and consideration whatever they receive on which only the tax is to be paid. There is no depreciation which you need to compute at that point of a time. Next slide, please. Yeah. So what are the set of rules? Somebody is questioning. From 1st of July 2019, GST portal has been updated with the new system of ITC utilization. So there is a protocol for it. So in case of CGST liability, CGST credit is utilized first and then IGST credit. However, one must take into consideration that no IGST credit is pending. And in case SGST liability, SGST credit is to be utilized first and then IGST. However, one must take into consideration that no IGST credit is pending. And CGST credit cannot be utilized against setting off of SGST liability and vice versa. So SGST cannot be utilized to set off CGST liability. So the main aim while setting off the input tax credit against the tax liability is to have a minimum tax payout after complying with all the provisions of the Act, and to the extent possible to minimize your IGST credit in the books. Next slide, please. Yeah. So what are the restrictions that you have? Under income tax law, if depreciation is claimed on the tax component, then ITC is not available. Composition dealer cannot avail the ITC. ITC can be availed on earlier of these events. ITC on invoices pertaining to a financial year cannot be availed after 30th of November following the end of the financial year or filing of the annual returns, whichever is later and whichever is earlier, sorry. And ITC can be availed by a person taking fresh registration on all his inward supplies 30 days prior to such registration. So there is a window open for you that 30 days prior to your registration also, whatever purchases that you have made, you can take ITC in one go. And ITC cannot be availed on purchases meant for exempted supplies. Composition dealer, when after payment of tax, is entitled for the ITC on the stocks held on that date. When an exempted dealer comes into the tax unit, he is entitled to avail the ITC on the stocks held on date. Only IGST and compensation cess are allowed as ITC as part of import duties, as BCD cannot be availed as ITC. And if ITC on supplies is used for rendering both taxable and exempted supplies, then ITC will be restricted to the extent of taxable supplies, and the prorated ITC towards exempted supplies needs to be reversed. This is where the rule 42-43 come into play. And a banking company has to follow section 17(2) of CGST Act for availing prorated ITC, or else can avail 50% of the ITC only, and the balance will lapse. So these conditions, special conditions that I'm covering it separately. Next slide, please. Yeah. So ITC is not eligible on the follows. Somebody is questioning that what is the credit availability on the vehicles and all that gets covered here. Motor vehicles for conveyance of seating capacity not more than 13 persons, except when the same is used for further supply or training or transportation of the passengers. So ITC cannot be avoided. And vessels and aircrafts, except when they are used for further supply or training or transportation of the passengers or goods. Food, beverages, club membership, beauty treatment, plastic surgery, rent a cab, life insurance, health insurance, others are allowed only when they are in further supply. And services of general insurance, servicing, repair, maintenance of motor vehicles or vessels and aircraft for further supply only are allowed for ITC. And sale of membership in a club, health, fitness center, as these are considered as items of personal consumption. Next slide, please. Travel benefits extended to the employees on their vacation or LTC. Works contract is allowed only in relation to further supply. Construction of an immovable property on a own account. Composition scheme. Non-residents except for ITC and imports. Personal use. Goods distributed as free samples or gifts. ITC is not eligible. Please see the title that ITC is not eligible, and we are discussing various issues. Next slide, please. Fraud cases, restaurants, CSR spends, ITC is not eligible. So somebody is questioning that I wanted to understand between 73, 74 in relation to ITC 73, 74 discussion, that if you have paid any taxes after the demand is made under section 74, it is tantamount to a fraud case, and ITC is not eligible on such payments. Under 73, when you make a payment, then ITC you can claim. So that is what is the clarification for that. Next slide, please.
Yeah. Sir, let me just launch a poll in between.
Yeah, please go ahead.
Yeah, since you had already mentioned a bunch of ITC claim words, right? Let me just launch a poll for that. Audience, let me launch this poll. I hope you're able to see this on your screen. What percentage of your eligible ITC do you typically claim? Now, those of you are aware of this percentage, you can go ahead and choose this. We'll get a fair idea of where is the percentage that is averaging over here in this session. Mr. Nagesh, I noticed that you raised your hand. If there's any question, you can just put it on Q&A, sir. We'll take it up as the session goes forward. Okay, majority are saying 76 to 100. Okay. Yeah, the response rate is also good today. Good to see that. All right, can we have 2 more responses? Okay, great. Yeah. Okay, let me end the poll and I will just share the results. Kela sir, if you want to add any inputs on this, you can.
Yeah, but it's quite unfortunate to see that there are still people who are not able to claim 100% of their ITC. So this is a pathetic scenario, very alarming for the business. So you need to understand that why at all that you are not able to claim that. And if there are real problems, then maybe that you have to immediately address it. So you can go through this presentation once again, and maybe that you can revisit where exactly that you are not able to take the credit. And if you genuinely have any kind of a problems, we are reachable, that we can discuss it. Next slide, please. Yeah, there are special cases which I mentioned. At the time of cancellation of the registration and filing of GST REG 16, the details of input semi-finished finished goods held in stock on date on which the cancellation of registration is applied must be included, and any balance lying in the electronic credit ledger shall lapse. Post-sale discount shall not be deemed as payments to supplier, hence no ITC can be claimed on such amount. In case of manufacturing unit, entire ITC available, even if part of the input goes in byproduct waste, process loss, handling loss, natural loss, loss in transit due to natural causes, or atmospheric changes are allowed, and ITC need not be reversed, even if waste is not returned by the job worker. No ITC on advance payment, no ITC on short supply of inputs received, no ITC allowed on shed or shelter to protect the plant and machinery in civil construction, ITC not allowed on input services for CSR activities. These are some special cases under ITC. Next slide, please. ITC is allowed on brokerage services related to renting of building, not allowed on lease rent for pre-operative period, not allowed on gardening expenses and hospital expenses, not allowed is allowed on expenses related to guest house, transit house, and training hostels in relation to the business. If invoice not available, registered person can take estimated amount based on the prevailing market value, provided that the input tax credit in respect of such goods or services or both shall be available where it is obligatory for an employer to provide the same to its employee under any law for the time being in force. These are some of the important things. Maybe some of your questions are surrounding this only. So we can take it that somebody is asking whether it is a business related travel, whether I am entitled for the ITC. Yes, all such cases when it is in or in relation to your business, you are allowed to take a ITC, but where it is not, then it is treated as a personal consumption and ITC cannot be avoided. But invoice not available is a very rare case, but however, the law has provided it on estimated prevailing market value, you can avail it. But sooner that you should be in possession of an invoice. Now, I don't think that such cases will ever come. But important is the last bullet, where if the law mandates that something is to be provided, then ITC is eligible. And on this particular line only, many cases in relation to the canteen supply were decided, wherein that the canteen supplies, the ITC portion has been allowed for the employee to the extent that he had incurred the expenditure. Because if it is forming part of your employment agreement or the letter which is issued to the employee at the time of joining, that the canteen facility is there and it is mandated under the law for the Factories Act also, then certainly ITC is being permitted. So these are the special cases. Individual personal issues, that definitely I will address it when I take up the Q&A. But please post your questions in the Q&A box. Next slide, please. So some of the other issues also, like job work, the tax payer, that is principal, is allowed to take ITC of the goods or capital goods sent to the job worker for job work. Input is allowed even if the inputs are directly sent under the bill to ship to model to the job worker without they being first received or brought to his place of business. And if such goods are not received back by the principal or supplied from a place of job worker within 1 year from the date of sending the goods to job worker, or 3 years from the date of sending the capital goods to the job worker, then it shall be deemed that such inputs have been supplied by the principal to the job worker on the day when the said inputs were sent out. And this rule of deemed supply shall not apply to molds and dies and jigs and fixtures or tools sent out to a job worker for job work, because these can be permanently stationed at the job worker's end. And ITC need not be reversed even if waste is not returned by the job worker, but no ITC can be availed on short supply of inputs received. These are some of the things that one needs to keep it in mind while dealing with input tax credit. Next slide, please. So input service distributor issues a document called input service distributor's invoice containing the amount of input tax credit and distributes the credit to the branches having the same PAN number on a proportional basis in the ratio of the turnover of all such recipients that are operational during the year. The tax credit available against any specific input services used entirely by one of the recipients can be allocated only to that recipient for utilization of such credit and not to the other recipients. No differentiation is made to whether the unit is registered or not, and therefore credit attributable to the unregistered unit is distributed to that unit, which implies it is a loss of credit. For this, input service distributor has to be compulsorily registered as ISD apart from its registration as a normal taxpayer under the Act. And ISD cannot distribute credit on inputs, raw materials, and capital goods, and to outsourced manufacturers or service providers. And the credit of tax paid under reverse charge mechanism is also not available for distribution to the recipient. So ISD has to utilize such credit only as a normal taxpayer. So these are the important things that one needs to keep in mind in the ISD, because the finance bill of 2024, which was presented during the recent interim budget presented by the finance minister, has covered this aspect, that now ISD has become mandatory for all those who are having multiple branches. So one needs to keep it in mind what are the regulations that are applicable for the ISD in order to optimize their ITC, because large chunk of ITC normally gets distributed from the corporate office to the branches. Hence, if it is not properly handled, that it will get questioned and we may lose the credit also. That is the reason this is one of the important aspects that one needs to understand, that how to go with the ISD rather than on the cross-charge mechanism, because cross-charge mechanism is just like supply of a service by you. Hence, it doesn't require much of brains. But as far as ISD is concerned, one needs to be very meticulous while dealing with this particular complex topic, because you need to have a separate registration. And at the time of procurement itself, that you should tell your vendor that it should be billed to the ISD registration only. And in the ISD registration, you have to identify who are the users among the several units that you have, and then to those appropriate units that you have to allocate it. At the end of the month, ISD will not be having any credit outstanding in their books, because entire credit that is received in a month has to be distributed in the same month only. There is no carry forward as far as ISD is concerned. Next slide, please. Yeah. So banks and financial institutions, as I told you, have an option to avail the amount equal to 50% of the eligible ITC on inputs, capital goods, and input services in that month, or to take input tax credit only on purchases made for selling taxable or zero-rated goods or services, and leave out the tax paid on purchases made for exempted supplies. Option 1's exercise cannot be changed during the financial year. Also, a restriction of 50% doesn't apply where the tax is paid on supply from one registered person to another registered person having the same permanent account number. And the bank, financial institution, or NBFC opts to pay 50%, then the restriction of 50% shall not apply to the tax paid on supplies made by one registered person to another registered person having the same permanent account number. 100% is eligible for it. Next slide, please. Pipelines and telecommunication towers, there is a special provision made under the Act for availing the ITC in cases of pipelines and telecommunication towers fixed to earth by foundation or structural support. They are not treated as immovable property, but ITC is being allowed. The input tax credit shall not exceed 1/3 of the total ITC in the financial year in which the said goods are received, 2/3 of the total ITC, including the credit availed in the first financial year, in the financial year immediately succeeding the year referred to above, in which the said goods are received, and the balance of the amount of credit in any subsequent financial year. That's how that is a special case under ITC for pipelines and telecommunication towers. And similarly for the, of course, it is on the output tax itself that special consideration is there for solar power equipment also. One needs to take care. Next slide, please. So some of the commercial terms that point us that you need to watch out, that there are many practices currently being undertaken by the company in order to protect the ITC. So while placing the purchase order, there is a condition being imposed that invoice gets paid only when ITC gets reflected in the GSTR 2A. But you need to have the extra people and time to monitor this and to make the payments. But when you are dealing with a MSME, then you need to be very careful when you adopt this first practice. Some are holding back the GST portion of the invoice, still the same is reflected in the 2A. Some are blacklisting the vendors who are not filing their returns. And there is an adverse impact on the MSME, particularly in service sector, and the MSME vendors are finding it difficult to file the returns and pay the taxes in time. Somebody has pointed out that whether the ITC should be reflected in 2A or 2B. Yes, it is your 2B. You are right. Depending on the nature of the business, one needs to adopt a strategy, as one rule doesn't fit all the situations. And in some cases, vendors will insist on advance payments also. When you are dealing with some commodities which are rare in the market, then you may have to pay in advance. So in such a scenarios and all, then you cannot adopt these kind of a strategies. But after taking advance from you and making a supply to you, if it doesn't file his return or not pay the tax, then your ITC is at stake, because on advance you cannot avail the credit. While making HR-related expenses, care must be taken to structure the agreement in such a way that the company is making further supply so that ITC is available in their hands for payment of output tax on the recoveries made from employees. That is one important factor that you need to take care, so that the ITC is not going to be a cost to you. Next slide, please. Yeah. So we come to the end of the presentation. I might have rushed through the whole thing in order to save on time, so that we can interact to the maximum extent and discuss the individual issues, because no issue is common. So everybody will be having their own personal variations to it. So certainly I'm going to address that. So coming to the chat box. So if I go through it, that yes, I have discussed on the block credits and maximum ITC availment and rule 4243, ISD cross charge, 7374 limitations, and then what is restricted earlier and what is now available. Instead of that, I should say what is allowed in the past and what is not allowed now is in relation to the CSR expenditure. Previously, CSR expenditure is allowed. Allowed means that it is debated, but there is no express restriction. But now in the law, there is an express restriction that you cannot avail it after 1st of October 2023. ITC temporary and permanent reversals, which we have discussed, that the temporary reversals happen when you don't pay the 180 days. But once you pay, then you can take it. But if something is not short supplied or something, that you have to reverse it permanently. So all such scenarios that we have covered. See, EVA bill from vendor dump will not be sufficient. That each and every supply that you have to track it separately only. Is there any limit for scrap sale to remit GST? There is no such limit, because every single rupee that you have received as a sale consideration should be subjected to tax. Sale of vehicles, whether it is subject to ITC, if that is the question, then at the time of buying these vehicles for the company, if you have not taken any input credit, then at the time of sale, then you need to see what is the depreciated value in your books and what is the sale consideration that you are receiving. If the sale consideration is over and above the depreciated value in the books, don't only on the difference that you need to pay the GST. If it is less, then there is no GST to be paid. So that's how the sale of vehicles has been already clarified by the board. Is there any limit for the scrap? That there is no such limits. Without GST, and how ITC reflects in the 2B to take the credit. I could not follow this. Traveling for business meetings, yes. If it is required for the business purposes, definitely. So if a company uses bus transportation, ITC will be eligible or not. I told you it all depends on the seating capacity. So as per section 17.5, one needs to evaluate. Interstate hotel expenses, whether it interstate hotel expenses or intrastate hotel expenses. If the hotel expenses are in or in relation to your business and there is a nexus with the business, then maybe you can try your hand, but otherwise it is not going to be. Construction related ITC is eligible if booked in revenue as expense not booked in capitalized. See, it's not about that whether the construction is resulting in a movable property or not is also one of the criteria. It is not just whether it is a revenue or capital in nature, but you have to see that what is the construction resulting in, and whether ITC is available for the bus provided more than 13 number seating capacity to the employee for to and fro office and residence. See, commutation is something which is already there in the employee appointment letter. Then certainly you can take the ITC if the seating capacity is more than 30. All expenses should be based on the turnover only, or any other basis is possible. I did not follow this because all expenses should be based on turnover. Turnover and expenses do not have any kind of a relation. In new norms, RCM is also included in the ISD. No, ISD person cannot pay anything under RCM. So if RCM is payable, then the ISD holder should have a regular registration in order to pay the RCM and to take the credit, and again cross charge it to the ISD so that it can be distributed. So GST are 2A or 2B, that the Pramod has clarified that it is sounded me that it should be 2B. Yes, I agree. And how self-invoice can be related to, can we avail business-related employee travel and relocation expenses? See, if it is part of your employment letter, then certainly. Let us take an example. If I hold the GST payment of a supplier due to default, can I take ITC as I have paid basic amount to supplier? See, when you have paid the basic amount, you cannot avail the ITC, because unless you have made the complete payment that within 180 days or 45 days in the case of MSME, that one of the eligibility conditions that you will be failing, so you cannot take it. Maybe you can try your hand at a prorated thing, that including the GST, whatever is the amount, and without excluding the GST, prorated amount, that you can try. But I suggest that not to venture into such kind of things, because monitoring it will be difficulty for you. Can we avail GST input on guest house, housekeeping materials and electrical materials? See, these guest houses and all, if it is completely used only for the business purposes and you have got enough documentation to prove, then in such a case it is fine. But these guest houses cater to the requirements of the government officials and all, for which that you cannot give any kind of a business nexus. In such cases, it becomes a problem. So it is a debatable issue. Construction of hotel building for own use, labor provided by self and less than 20% of the project cost, is GST payable on RCM. See, construction of a hotel building for own use and labor was provided by you. So rest of the materials are resulting in a removable property. In such a case, it is not possible. However, there is a ongoing litigation in the Supreme Court, for which unfortunately the hearings got completed, but the judge got transferred. Hence, we could not get the final outcome. Safari retreats, you can watch it. As and when the decision is available, maybe it will address your query. GST treatment in case of notice period recovery from employees. Indrajit, this has been debated and discussed several times in the past also. See, this is akin to the salary only. So if the employee is paying, then in that case, his Form 16 gets reduced to that extent. If the company is paying the notice pay, then to that extent, Form 16 is enhanced. So in either of these cases, it is treated as a salary income, not subject to GST. Can we claim ITC on the gift given to the employees on festival by the company? See, this is not something which is there in your employment agreement. So this gift is given free of cost. So you are not getting any kind of a consideration at the time of resupply from your end to the employee. Hence, at the first go, when you are buying these gifts from outside, then you cannot avail the input credit. ITC eligibility, earthwork for structure, concrete, allied works, structural steel works of a new factory. All these, if they are resulting in a removable property, then you cannot avail it. But if it is for installation of a machinery, then you can take it. ISD case, turnover only should be the base. Yeah, ISD can be the turnover, but in some cases, if there are any other identifiable parameters, then in such a case, as per the agreement also, you can apportion them, not a problem. In construction contract, if I purchase building materials separately and give job work for construction separately, is ITC? See, ultimately, it is resulting in a removable property. So I don't think that you can avail it. ITC on hotel accommodation, if it is in relation to the business, then certainly you can avail it. And most of the cases, invoices are not available from bank against ITC and bank charges for availing ITC. So during GST audit by department, can we produce bank statement as the valid document against availing the ITC? Banks are now mandated to give a consolidated invoices on a periodical basis. So you can try with your banker. But otherwise, all other corroborative evidence, certainly that you can furnish, which will help you in getting the ITC. And then We are manufacturing tool on behalf of overseas customer to manufacture their product and collecting tooling charges through debit note. We are not exporting the tool to our overseas customer. Can we avail GST charge in our debit note for recovery of tooling charges to overseas customer? See, when you have incurred certain expenditure and the tool has emerged out of it, the tool is being charged to the overseas customer by way of a debit note. In such a case that though physically export is not happening, but for that you are going to receive the forex only. So how you can charge the GST? You must be charging the GST because the tool is kept with you. So it is going to be but not treated as an export, though the consideration is coming in foreign exchange. So when it is on your output that when you are charging him, how you can avail the same ITC again? Because 100 rupees is the tool cost. 18 rupees is the GST charged on it. So 118 you have billed it to the customer. How you can take the 18 rupees credit again? Don't you think it is absurd, sir? Please think again. If you have got any supplementary queries, I can certainly take it. Self-invoice must be required to raise RCM and keep in record. Yes, it is a must because you need to have a document in order to claim the credit. Hence, self-invoice is the document in case of RCM. I have received an invoice of 100 but paid 50 in full and final settlement. Then prorated input credit only will be eligible to you. Can we get in input credit on the goods purchased for employee benefit? Refrigerator purchased for employee usage where dealer has given accommodation to his employees. Sir, anything personal, I don't think that input credit is going to be eligible. So employees personal use, you cannot take it. Can I avail ITC on proportionately? Yes, I told you the case where 100 rupees consideration paid, 50 rupees only that you have paid, 100 rupees is the invoice, 50 you paid. So you can take partial input credit. In case where we have reversed the GST input under rule 137 and made the payment to the vendor after 2 years, can we avail the same back? Sorry, yeah, if you have see that this law is very peculiarly worded. When input credit, if you have taken and you did not make the payment within 180 days, then you have reversed it. And after 2 years, you made a payment. If you want to take it, then you have a good case in your hand because there is no timeline which has been mentioned in the law. But the only problem that we will face is at the time of reconciliations that this particular credit will not get reflected in your 2Bs or 3Bs anywhere, but you will be availing it under the annual return only. There that you will have a challenge. If you can overcome that, definitely that this credit is going to be eligible. Only in such circumstances where that within 6 months that you have taken the credit on receipt of the invoice or the supplies, but later you have reversed it for whatever may be the reason, but ultimately that you wanted to avail it later after making the payment, that can be explored. In case of SEZ supplies, many times IGST doesn't reflect in the GSTR 2B. Can customer take credit based on the invoice and bill of entry? Yes, even if it is not reflected in the 2B, that if you have paid the taxes and you have got evidence in your hand, then certainly based on such evidences that you can avail the credit. But it is always suggestible that you check it that why at all that it is not reflecting in the 2B. All these problems are going to be addressed once the integration of the SEZ online with ICE as promised and as taken up by the board is completed, which can happen in another 2-3 months time is what is expected, that all these problems may not be there. If payment is not made to MSME vendor within 45 days, ITC avail needs to be reversed after 45 days or 180 days. See, the law says 180 days. MSME legislation has come later. So rather than the GST law, if you don't make the payment within 45 days, you will have bigger issues from other legislations, not from the GST. But as far as GST is concerned, yes, this 180 days that you can take shelter. Even if the payment period is 45 days, that your shelter can be for MSME 180 days. It is a lapse in the law, Mr. Mohan. What you have pointed out is very valid. So this is the problem in the law. I think in the chat box, all the queries that I have addressed it. So now I am taking up. So one more has come, whether only packing and labeling of goods will be covered under the job work. Yes, sir. It is covered under the job work. Not an issue. Job work need not be the manufacturing only. I'm coming to one more question. As per Rule 42, ITC reversal, non-GST supplies need to be added in the turnover to calculate the reversal. Exempted supplies definition, you can just see, sir, that I have given the slide. So as per that, you need to do it. Now I'm coming to the Q&A session where the first question query is, can we claim ITC on gift given to the employees on festivals by the companies? No chance. When it is given free, then you are not entitled for the ITC. Sir, can we claim ITC on purchase of TV, one-time purchase? What for you are purchasing TV? Is it in relation to your business? Because some of the times in the process areas that television is required, it may not be telecasting the cricket matches that are being played, but maybe some process parameters and all that. In such a scenario, it depends that if it is in or in relation to the business, definitely ITC is eligible. If not, no. Rent paying to our director staying in guest house, we are paying RCM for the same. Can we avail the input credit for the? See, the director's remuneration, whatever that you are paying as per the agreement, if it is an RCM, then yes, you are entitled for the credit also. Kindly share this template and slides. They are helpful. Thank you that we are going to do it. And to preserve and read them again anytime, sir. And then bank charges for foreign transactions, GST, can I claim 100% input? See, what I told you is that banks cannot claim 100% input on their purchases, but not about you. You can claim 100%. Can we take ITC on the interiors like lighting in the showroom? See, whatever it is, that if it is in relation to your business, certainly you can. But if it is out of immovable property, you cannot. For movable things, you can. ITC eligibility for earthwork for structures, concrete allied works, structural steel works of a new factory. See, this new factory is a concept under the central excise law for initial setting up of all. But here, unfortunately, under the GST, you do not have such kind of a clarity. So, on immovable properties, you are not entitled. So, some more chat queries have come in, which I am going to read it. Intercompany transfer of goods on NRGP without invoice. I do not know what is this NRGP. If Indrajit, if you can explain, maybe that I will be able to answer you better. If supplier has charged excess GST on invoice and also uploaded in the GST return, can I take credit? See, ideally you may, but the thing is that if you had charged you excess, are you going to make the payment also? That is the most important question, because the conditions, if you see for ITC eligibility, is that you should have received the supply, you should be having an invoice on hand, and then you should have paid for it also within 180 days. So if he had charged you extra, are you going to pay him extra, or you are going to pay him the right one? That decides what amount that you can take. So kindly go through meticulously all the points. If all the points are giving you yes, 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 then your ITC is also yes. If not, no. Can you explain disclosure in table 4 of GSTR 3B, 2B approach versus PR approach comparison? Claim ITC as per GSTR 2B. What is impact to the... Sir, this itself is a big session that I don't think that in the given time that we will be able to cover this kind of reconciliation. Non-returnable gate pass. See, if you are, Indrajit, if you are supplying a material, intercompany transfer of goods or non-returnable gate pass, I don't know how you are able to do this, because see, one company has obtained the goods and you have taken the credit, and then you are sending it to another registration of your own company, but it is having a different registration. If that within the same state, because the registration number remains the same, then NRGP, if you are transferring it, no problem, because in that state the credit remains. Credit is always attached to the goods. So what you need to remember is, when you are sending it to another registration of which belongs to you, then even the prorated credit also should travel with it. It cannot be that you keep the credit with you, but not the goods. I think I'm clear, Indrajit. So what I'm saying that when you are sending it to your own registration of another registration, then along with it, whatever is the credit there on should also get transitioned to that particular state. Bill to ship to, please put some light. See, bill to ship to is a transaction which is actually two transactions. We may call it as a bill to ship to as a single line, but it is actually two transactions. There are three parties involved in it. So one party is making a sale to another. Party A makes a sale to B, but B has got a customer C. So what B says, you give me invoice, but you give me the goods directly to my customer C. So in such a scenario, what happens? A bills it to B, ships it to C. Then in turn, what B has to do, once he receives the invoice, he needs to make another invoice of his own invoice. B has to invoice to C. Then only the transaction gets complete. So in a bill to ship to transaction, there will be one single movement of goods, but two sale invoices. If that is then done, then it is perfectly fine. Another thing also here. See, I'm going to bill it at 100 rupees. He is going to in turn bill it at 150 rupees. So goods are directly delivered to C, but I have billed it to at 100 rupees to B. So the tax paid thereon is 18 rupees. But B is going to sell these goods to C at 150 rupees. So he needs to take a precaution that C is not going to get the information that he bought these goods at 100 rupees, and he needs to educate his transporter, whosoever is handing over the goods, to see that the invoice that you have received from A should not be handed over to C. I am going to give you a higher invoice, higher valued invoice of 150 rupees to him. So with the 27 rupees of tax, you hand it over to C. So C gets goods directly from A, but a revised invoice with a higher price from B. That's how it should happen. But you need to take this extra care. Otherwise, C comes to know that this was a goods which were purchased at 100 but being sold to him at 150. That should not jeopardize your business scenarios. So you need to take that extra care. In returnable delivery challan, is there any time limit specified under the GST rule? See, there is no time limits specified. What happens that when you have given it to somebody, and if that person is holding this goods for more than a year and all, then all of a sudden, if there is going to be any audit and all, then you will be having a problem to explain that why the other person is using your material for so long. Because normally, returnable delivery challans will be given kind of a scenarios where repair works are undertaken. Repair works cannot go for more than a year. So normally the returnable gate pass means though there is no time limit specified under the law, that you should get back the goods, because it is given on returnable gate pass means that you are expecting the goods to come back. If the goods are not going to come back, then definitely you are supposed to reverse the input credit. GSTR 3B, we are reconcile ITC with the 2B, but in GSTR 3B, we are reconciling ITC with the GSTR 2B, but in GSTR 9, table 8, ITC populated from 2A. Sir, this problem is there. That is where the reconciliation becomes all the more important. That is where I always suggest that it is not a business promotional activity. You can go with anybody, but go with some good ASP, GSP providers who can help you in all these matters. Because humanly, if your company turnover is less, your number of transactions are less, manually you can sit down, understand where the difference is coming. You are very right in pointing out, Mr. Sanjeev, that the 3B gets reconciled with the 2B, but 9 gets reconciled with the 2A only. That is where the differences will crop up. So it is definitely a heartburn issue. So you need to explain those differences to the authorities satisfactorily. Otherwise, it will lead to a lot of protracted litigation. You are very right. In that relation only, my comment is that please go with some ASP, GSPs who can help you in these quick reconciliations if your transactions are more and manually it is not possible for you to do the things. What in case C is not having GSTN? So it is going to be a B2C sale. In such a scenario also, the law remains the same, but the only thing is C will not be able to take the credit. In the B2 ship to case, that Chandar, you are putting a question that if C is not a registered person, absolutely no problem. It will be treated as a B2C sale. In a B2 ship to, there is no mandate that everybody should be registered. Some partitions are installed in the office premises and it is capitalized as building. Whether ITC is allowed to claim partitions installed in mobile structure. Partitions are installed in the mobile structure, but when you have capitalized them, you know the answer better. Is ship to GSTN mandate in case bill to ship to supplies? Since some state objecting as the same and issuing notice, kindly clarify. In case of interstate works contract tax, case to dispatch the goods directly from the vendors, is ship to GSTN mandate? See, this is what I'm telling. If see, then A bills it to B, and but ships the goods to C, and you are saying that B, who is getting it billed, is not having a GST registration. In such a scenario, that sale is going to be a B2C sale. So whatever tax A has charged to B will not be creditable for B. So if B, in turn, being a non-GST person, if he is making a sale to C at a higher price, but if he is not within the GST threshold, jolly well, it is going to be a non-GST supply for him. Absolutely no problem. Can be done. But what I'm not able to understand that your second part of the question, in case of interstate WCT case, to dispatch the goods directly from the vendors, absolutely there is no problem that anybody can dispatch the goods to anyone else, irrespective of whether the recipient is having a GST number or not. Similarly, if the sender is also not having a GST number, there is no bar that he cannot supply the goods. He can do it. On sale of SAP, I think that I've clarified it, though initially there was a confusion, but I thought that this could be the answer for you. If not, you can certainly put the supplementary. On sale of sample goods, will it be okay if I pay GST and the value of goods as output liability, or should I reverse the ITC on the proportionate basis? See, when you are seeing that sample goods, how you can make a sale, sir? I fail to understand. Is it that some item that you wanted to give it at a lower price? Please clarify, because if it is given free of cost, answer is very clear that you have to reverse the ITC. But if it is sold, when you are saying that it is a sample and at the same time that you are saying sale, that these two don't gel well in the market. So please clarify. Annual maintenance contract for removable property is expensed in the P&L, whether ITC is allowed to claim. Annual maintenance contract, whether you are expensing or whatever it is, that accounting treatment has got no nexus. But if your AMC is in relation to your business requirements, then certainly ITC is allowed. Even if it is for immobile property, but it is in relation to a service only, so you can take the credit. If we charge any building, construction related major work to P&L instead of capitalization, GST credit. See, there are two things for this immovable property. There are two things I always say. One is whether it is resulting into immovable property is one thing. Second thing, whether it is capitalized in the books. If both the answers are there for you, then only the ITC eligibility can be discussed under 17(5)(c). Okay. So how e-way bill is to be activated in case C is not having GSTN? See, e-way bill, there is no condition that it has to be done by either the supplier or the recipient. It can be done by even the transporter also. So that question can be answered in that way. ISD can transfer ITC to other state GSTN for hotel stay credit. See, hotel stay credit will not be given on the IGST basis, sir. Somebody is from Pune office that he checked in Bangalore office. Then in such a scenario, why you have to take the hotel bill in the Pune office address? You can as well take it in the Bangalore office address and be with it, no? Because normally hotels and all will give you CGST, SGST. They will not give you IGST billing. except when it is going to be a supply to a SEZ employees. So Anand Chavda, your question is ISD can transfer ITC. First of all, how you are going to get the ITC from the hotels, that is not clear. But not GSTN in Bangalore. So you don't have a registration in that particular state, but you have checked into a hotel. So that you want to take it in the ISD. I'm afraid that you cannot take that into the ISD, sir. You cannot take it into the ISD, no, because it is not something that the employee belongs to one particular unit. So he has to take it in that unit's name and GST number only. He cannot take it in the ISD registration. No, ISD registration comes into the picture only when such a service is going to be shared. In POs, they are not allowed. In POs, they are not allowed. POs means purchase orders. Place of supply, they are not allowed. Yeah, that is precisely the question. What I'm saying that hotels will always give you CGST, SGST only. They never give you IGST invoice, no? So if you are not having a registration in a particular state, and if you have checked into a hotel in that particular state, then that ITC is gone for you. Say, for example, a company situated in Pune, the employee comes to Bangalore on a business trip and checks into a hotel in Bangalore and collects the invoice. It will have Karnataka SGST and the CGST. That is not going to be creditable for you. So for that purpose, you cannot ask the Bangalore hotel to give this invoice in your ISD number. It is not possible. They will not give. You cannot take. Bangalore hotel will not give you their invoice into your ISD. Even if they give it also, that you do not have a registration in Bangalore, no. So how a Karnataka GST, SGST, you can take as a credit in your ISD when you don't have a presence in Bangalore? That is what has caused the trouble for you, right? So in such a scenario, it is not permitted. Yeah, there are another two questions in the Q&A. Some partitions are installed in the office, which I have already told you. And partitions installed in movable structure. Yes, I have explained this, Balaji. So any other questions? Any other participants have it?
Yeah.
I think our participation has reduced to 2/3.
Yeah. Also, audience, those of you who are interested to directly interact with Akela sir, I'll be able to do that. You can just raise your hand and I'll be able to unmute you. You
One
can talk.
Mr. Nagesh Padir has raised his hand.
Let me check. Mr. Nagesh, would you like to interact? I think okay. I will just allow Mr. Shivanand since he's okay.
Shivanand did not do. No thanks,
Okay.
he says. Anand, yeah.
Yeah, yeah.
Nagesh Padir also.
Okay, Mr. Anand. Yeah, go ahead, sir.
सर अभी नया जो रूल आया है आईएसडी में अभी मतलब रजिस्ट्रेशन लेने के लिए तो अभी मेरा जो बात हुआ ना बैंगलोर के लिए तो इफ आई टेकन आईएसडी
Sir, whatever new rule that has come, you are saying in the budget of 2024 that they have not yet given any kind of instructions about it.
Okay.
So our discussion is going to be premature as far as that is concerned. If they are going to extend it the way that you are thinking, then maybe certainly that we can come back and revisit it.
Because of
But
sir,
as it stands today, if you
yeah.
do not have a registration in Bangalore and you belong to Pune and you have checked into a hotel in Bangalore, then Bangalore hotel will give you an invoice in the CGST and Karnataka SGST, which is going to be a cost to you.
या बट सर तो हर एक आदमी मतलब इंडिया में कहीं भी जाएगा ना जो भी अपना सेल्स का बंदा होगा कहीं भी जाएगा तो उसका क्रेडिट तो लैप्स हो जाएगा ना सर पीओएस में वो तो बिजनेस पर्पस के लिए जा रहा है फर्दरनेस ऑफ बिजनेस के लिए
आई एम फुल्ली विथ यू बट अनफॉर्चुनेटली द लॉ एज इट स्टैंड्स टुडे इज नॉट एड्रेसिंग योर क्वेश्चन इट इज मेकिंग इट अ कॉस्ट इन योर हैंड्स
ओके सर ओके थैंक
you Mr. Anand. Okay, anyone else? Anyone else who would like to interact will be able to allow you to talk. Anyone else with any queries? Okay, we have one more. Mr. Chandar, yes. Yeah, you should be able to unmute now. Yeah, Mr. Chandar, we can't hear you. At times there can be a mic setting that you might have to change. Yeah, I think you have unmuted, but we cannot hear you. That's the problem. You can just check your mic, sir. Right? We've had this issue with a few other speakers.
Is it okay now?
Yeah, we can hear you. We can hear you. Yeah.
Hi. Hello.
Hello,
Yes.
hello, Mr.
Hello,
Chandra.
Tell me,
sir.
sir.
This was a very interactive session, and my heartfelt thanks to you
Thank
and
you,
for
sir.
the knowledge you have shared.
Thank you.
Thank you so much, sir. Thank you so much.
Thank you, sir.
So any question that you have, Mr. Chandra?
No, question is not there. Just wanted to thanks.
Okay, okay,
Oh,
okay.
personally,
Okay.
thank you very much.
Thank you, Mr. Chandra. Thank you. All right. I think Mr. Nageshwar has a question. Mr. Nageshwar, you can go ahead.
Yeah, first of all, good evening to all and good evening to Akala sir.
Thank you.
Actually, I think I may miss something about cross charge.
Yeah.
While we are distributing ITC between the branches via cross charge, whether we can make RCM input also? We can
See, sir,
consider.
yeah, absolutely. If you are having a individual registration, not of ISD,
Yeah,
and you have taken something under RCM,
yeah,
and you have availed the credit,
yeah.
then if you have shared that particular service with another entity to which you want to cross share, yes,
Yeah.
you can do that.
Okay, mainly our thing is we will do the all accounting in head office only.
Right.
So related to all branches,
Yeah,
even
but
like
sir,
telephone
after
charges.
this current financially this budget announcement, I think that you should seriously look at ISD.
Okay, IST. Yeah.
Yeah, this cross charge is not going to help you further. So you should seriously look at ISD.
Okay.
So because that it is becoming mandatory. Of course, the fine print of their legislation has not yet come out. That is
Okay.
what that I was discussing, Mr. Anand Chawda, also just now.
Okay.
That we do not know the contours of it, but they are making ISD mandatory. So
Okay.
cross charge is something which you need to do it only for certain things, but all shareable services normally you should receive it in the ISD and then you have to distribute it.
Okay. Okay, then got it, sir. Thank you.
Yeah.
Thank you very much for your knowledge sharing, sir.
Thank
Appreciating.
you very much.
Yeah,
Thank
thanks a
you.
lot.
Thank you, Mr. Nageshwar.
Yeah, thank you, sir.
Okay, Mr. Pramod has a question too. Mr. Pramod, yeah, you will be able to unmute and talk now. Mr. Pramod, you'll have to check your mic, I think. You have unmuted, but we cannot hear you. Yeah, we can hear you.
Yeah. So thank you first of all. So, and apart from this, see, like just want to ask the question. Say it's a year-end closing, so everybody knows like there is a GST credit into the 2B, but many of cases like that, there's a where invoices are not available, but the service has been performed. So can SSE is eligible to take the ITC based on the service performed, whether the service has been completed, but the invoice has not been received by the recipient? So is there any
See,
mechanism?
the situation what you are explaining, that the invoice you have not received physically, but the
Right.
invoice has been issued. You are sure about it.
Correct. And it is reflected into the 2B as well.
Yeah, that's why. Because otherwise, how it will reflect in the 2B? So the only thing is that you did not receive it, the physical copy. Nowadays, that you need not wait for the physical copy, sir, that you can request for the soft copies also. Because most of the invoices, everything is a e-invoice nowadays. So why you need to have a physical copy in your hands? Unless your company's policy is that you should receive a physical copy in order to initiate the payment process, that is fine. But as far as ITC is concerned, once the electronic invoice is there and it has been communicated to you in the form of a soft copy, which has got that QR code in it, then it is perfectly fine that you can avail the ITC.
No, sir, but my question is that, see, let us assume I have not received the soft copy as well. So
yeah, that's right. But you ask for it, but you can take it.
Okay.
See, that's what I told you, that on an estimated basis also that you can avail the credit. But the only thing is that at some point of a time that you must have an invoice with you. Either in the form of a soft copy or a hard copy. So you can take it because that it has already come in 2B. So he must have issued it. Maybe that there is a delay or mail communication or mail has gone to spam folder, which you have deleted it. So many things can happen, but certainly if you are sure that you can receive the invoice at a later point of a time, but not with a later date, because it is already reflecting to be, you are safe, you can take it.
Okay, sir. Thank you. Thank you very much.
Yeah.
Thank you, Mr. Pramod. All right. Okay. I think any further questions, audience? Any further questions? We can, I think we've already extended it obviously by half an hour, but another 5 minutes, I think we can, since we've anyway taken up queries and the session has been great. Another 5 minutes, I think we can spare. I hope that's okay with you, sir.
Yeah. If some questions are there, definitely I'll be happy to take it.
For sure. Yeah.
I don't want anybody to wait, because already the participation has reduced to
Reduced.
50%.
Correct. Audience, any further questions? Okay. Thank you, Mr. Nageshwar. I'm glad you liked our session. All right. Okay. I think we will take that as a a sign for no questions and call off the session for today.
Great, sir. So I think that for 3 continuous years continuously, that yes, this PPT is going to be shared with everybody. So for 3 continuous years that I have covered this input tax credit topic, so I don't think that there will be anything left as far as input tax credit is concerned, any kind of a doubts. Yes, that there are certain pointers like ISD cross charge is becoming another hot topic, I think. That once the final legislation comes out in public, maybe that this is one topic which we will be visiting in future. But otherwise, that if there are any pointers for the future seminars, please tell us. That we will be happy to cover those areas also, which are of interest for you, where that you have got any kind of a challenges. So I am reachable on the credentials that will be shared by Siddharth, and this presentation slides also will be shared by him. Thanks for all of you to participate, to take time of your busy schedules to come and attend this session for more than 1.5 hours. Thank you very much.
Absolutely. Audience, on a side note, before we close, I just want to mention that today's topic was decided on a survey. I think all of you would have seen the mail. So we will definitely share out another mailer, and I request all of you, those who are interested, to please mention your topics that you are interested to hear out, and we will take that up in the coming session. So thank you all for being a wonderful audience, and a special thanks and huge shout out to our speaker, Mr. Akela, for yet another successful session and taking the time and dedication to complete the session with a lot of insight and answering the questions one by one. So that is truly appreciated, sir. Thank you so much for your time and efforts.
Thank you.
Yeah, on that note, we will close the session for today, and we look forward to seeing you all on our next session together. Thank you all and have a wonderful evening. Bye, everyone.